Well, we do know now how the stores fared last month, but what did consumers actually do when they got to the cash register? For deeper analysis of consumer transactions, we're joined now by Michael McNamara, Vice President at MasterCard SpendingPulse. MasterCard comes out with these monthly retail reports based on the actual purchases of consumers. So the headline that's running right now is that your retail sales look a little bit better than some expected, but you've detected that it took a little bit more flexibility on the store's part to get the consumer to buy. These price cuts are coming in again.
Yeah, a couple of key points. It was really a bit of a mixed bag in June. The apparel numbers, the specialty apparel numbers that many of them whom are reporting today did relatively well. Department stores had one of the best months we've seen in 3 years in terms of growth rates. So those are both good areas. However, they did need to rely on a little bit more discounting in order to drive those sales this month. Consumers are really looking for sales, and that's where they spent their money in June.
So perhaps stores aren't as much in the driver's seat as you might think at first glance. Tell me what's happening on the luxury side of things, because the high-end consumer has been showing a little bit more resilience of late, but that wasn't the case in June.
Yeah, key thing in terms of luxury sales, you have to pay attention to the funding of where those sales come from. You have to look at the stock market.
Yeah.
When the stock market doesn't do well, luxury sales tend not to, it has a bit of a negative echo effect into luxury sales. And we saw that in June with a negative year-over-year comparison for luxury. Put that into context, though, one of the other drivers is exchange rates in terms of international tourism. You really have to watch the major cities, how they're doing in terms of international tourism. So stock market and the strong dollar, both somewhat negative in terms of what happened in terms of luxury sales in June.
That's really important for stores like Saks, where their flagship here in Manhattan gets, what, like 20% of their sales. That's a very key point to touch on. Talk to me, though, about the bright spot that seemingly every retailer wants to highlight here, and that's what's happening online.
Online sales have been consistently strong. You're seeing double-digit growth rate in terms of many of the categories. Apparel was up in the high teens in terms of the growth rate. Other thing that is more important now is that online sales are now accounting for more than 10% of apparel sales. Many of the categories you're seeing double digits in terms of how much share online accounts for. So you're seeing these big growth rates. They used to just be big, good PR numbers that were off of really bases that weren't very material. Now you're seeing good growth rates off of material bases that are having a meaningful impact on actual results.
And is there a shift on where those transactions are taking place as well? I mean, is that also a strength for the department stores, or is that elsewhere?
Department stores is another area. We saw high teens in terms of the online growth for department stores. Department stores has been in a long-term negative trend for the last really about three and a half years. Overall sales did show the first positive number that was seen in a while. Online sales, though, up about 18% year over year compared to June for the department store category. So that's one area that they really need to get right, and it seems like they are getting it right, and that's really driving the growth rates.
So either people look at accessories and say that's the ultimate, form of discretionary spending, or they look at it and say that's the one sort of guilty pleasure that perhaps women will spend on, a bag or a shoe. Which way is that taking us right now, that theory?
One point that was somewhat interesting in terms of the numbers, what we've seen in terms of the last 18 months, this entire downturn, women's apparel, I'll just take a step back, women's apparel overall, the growth rates have not been that strong. Children's apparel has been strong, so it seems as though some growth has shifted from women's to children.
But that's forced, or perhaps forced transactions. I mean, you have to get clothes for your kids. They're going to grow. You don't have to buy for yourself.
Yeah, you're not cutting back on the kids. One other thing, though, in terms of general overall luxury sales, again, you are seeing some declines there, and the costume jewelry segment did have a bit of a step back in June.
Okay. Well, we'll watch that. Thank you, Mike, for coming in.